Yeah, morning traders. We're seeing follow through moves from what we saw yesterday after the Fed meeting. Obviously, the debate yesterday was whether the Fed truly pivoted. Today, it's really about the US. We know it's in a technical recession with Q2 GDP contracting 90 basis points, but are they actually in an economic recession? The NBER will probably see that as unlikely, given that personal income and employment was fairly strong in Q2. The US average growth of job growth of about 375,000 in Q2, but ultimately the markets looked at domestic demand, and we saw after Q1 domestic demand was up 3% in Q2, it's gone flat. In fact, the interest sensitive areas of domestic demand have gone into contraction, and ultimately the price is the final arbiter of truth. And what we actually saw was 5-year treasuries dropping from 282 down to 264 on the back of this. If you have a look at in break-even rates, they've held in fairly well, but with the move that we've been seeing across all parts of the Treasury curve, with except the ultra long and the 30-year, which hasn't moved as much, we've seen real rates continue to collapse. In fact, 5-year Treasuries, if you look at them on an inflation-adjusted basis or a real basis, are now in negative territory. They were at 70 basis points only a month ago. So that's a big move in terms of real rates, and the dollar's under pressure on the back of that. You can see that really manifesting in a weaker dollar yen. In fact, the yen's just continued to be the superstar currency on the day. We've seen gold really benefiting once again from this dollar weakness, real rate story. You've seen that moving up into 1756. Crypto continues to work well. Really nice breakout coming through in Ethereum. We've seen the NASDAQ working nicely. It didn't really get much of a boost from the recession trade. It was only about an hour or so after the cash market opened that we saw the buyers moving up. After market, though, we have seen some pretty cracking numbers from Amazon, in terms of guidance for Q3. They've smashed it there. Intel, not so good. We're just waiting for Apple as I speak at the moment, but equities are holding on pretty well. It's going to be a good open for the Asian market coming through. In the session ahead, though, do keep your eyes on those employee cost index coming out of the US later on. The market's expecting that 1.2%. We also got core PCE. That's a big one there. But that ECI number, depending on what happens there, could move the dollar quite significantly.